Hi, I'm Melissa Bell, and welcome to the Business Roundup, where we catch up with the movers and shakers in the business world. Today, joining me again is Vijay Marolia. He's the Chief Investment Officer and an author by the pen name of Dr. Funkle. He's also been featured on Fox, NTD, and Wharton Business News. Thank you for joining me today.
Oh, stop it. But thank you for having me. It's an honor as always, Melissa. And wow, we have a lot to talk about, don't we?
Yes, we do. And I want to kick it off with one of the more recent things. Yesterday, the feds announced their cuts, and a lot of people were like waiting for that and they wanted to see what was going to happen. What are some of the takeaways that you got from the cuts, and how will that kind of affect the real estate market, both in the short term and long term?
Okay, so let's start with the first one. So, as we've been talking about for a while, all eyes have been on the Fed, and I think stock market participants have almost been spoiled by monetary policy, meaning that if they feel something is going to go wrong, or if you see equities or other asset classes dip, then the Fed comes in trying to save the day. And I think it's dangerous because of inflation. And I don't mean to sound like a broken record, but it's for a reason. So here's what I think. I think inflation is not going away. Speaking of broken record, but please believe me, because that's how you protect yourself. D- Regardless of what side of the political aisle you're on, everybody knows that the cost of living is rising. But some people think the economy is headed in the right direction. Some people think that the economy is not. The reason why the people think the economy is not headed in the right direction, they're not feeling enough positive economic impact. Why? Because inflation is beating their wages, their earnings, their balance sheet, if they even have one. And that's the reason why I wrote the book, because we need financial literacy. We have people that are adults that don't have financial literacy, and that's not to insult them. That's to insult the people that are being paid or taking pride in quote unquote being leaders of our educational system, because all they've led us to is insanity, anger, resentment, and welfare.
Yeah, that makes sense. So instead of like, I mean, I guess like educating or getting financial literacy education is more about kind of how to like surf these waves of like higher interest rates or different things that we're going to experience, because you're saying that this is part of like the normal market in some ways.
Well, yes. In other words, it's so normal. So, for example, I bet that all of our viewers, even though I don't know their demographic statistics, the Federal Reserve was created in 1913. So, I bet that nobody is watching that was alive when the Federal Reserve was not here. But America was alive. We were doing fine before the Federal Reserve. Since the Federal Reserve was created, the dollar has lost more than 98% of its value, and that's half their job. Forgive me for going off tangent, but I heard the most dangerous thing from Scott Bessent. And by the way, I've been a Scott Bessent fan, and again, maybe I should not use that word, because people are people, they have responsibilities, and decisions are not necessarily good or bad. There are trade-offs. If you decide X, that means that something will happen to a Y, and maybe even more than a Y. I bring that up because Scott Bessent was on, I think it was CNBC, less than 48 hours ago. And maybe this was a gaffe, maybe this was a mistake, but he seemed to claim that the Federal Reserve had a responsibility for economic growth. It does not. It does not, based on anything that I've read or have studied, and I've been following the Fed for basically my entire professional career over 20 years. The Fed has a dual mandate. One of them is price stability, which is supposed to mean that the dollar keeps its value. So that's a fail. The other one is full employment. Full employment, they used to define as a 5% unemployment rate. But then they started massaging the numbers, right? They started moving the goalposts. And when you start massaging the numbers, moving the goalposts, you start getting all this BS. And speaking of BS, what about the BLS? The Bureau of Labor Statistics has been BSing us. And so I'm so glad that that leader has been let go, because those were lies, and those were harmful, and they were political. Now, as for the real estate market, I think that the biggest problem is more supply or lack thereof than it is the mortgage rates. Now, here's how mortgage rates work. They are a derivative. Mortgage rates are derived from another rate. That rate, the most important rate, and if for our viewers, if there's one takeaway, I don't want to bore you with the bond market, but the bond market does rule everything once you understand it. Mortgage rates are derived from the 10-year rate and changes in trends of the 10-year rate. What is that? That's what it costs the United States of America to borrow money for 10 years. So right now, that number is down to 4%, and it was north of 5 not too long ago. Now, you might say that, oh, that's only a 1% reduction. No, it's not a 1% reduction. It's a 20% reduction, okay? Right? Because 5 goes to 4, that's 1. That's what's more than 20. So what people don't realize is that inflation, again, is not going away. And I don't know why we keep giving it feelings. Oh, inflation is so stubborn today. Oh, inflation is so sticky today. Inflation is just us being too easy with monetary policy. And I'm sorry if I sound so flippant, but I'm not happy about the situation, because it harms the people that can least afford to be harmed.
So really, like, you think that this isn't really gonna do us any good as far as, like, with the real
You know what's
estate?
going to do? Well, I love the way that you talked about the wave, because inflation, that's how I describe it a lot. Because if you own assets, if you acquire um, property that's going to appreciate, income producing property is a great example. It could be intellectual property, which is an idea, right? So all you need is this. It helps if you have one of these. That's not a commercial for Apple. In fact, it's not a commercial for anything. What it's a commercial for is, do not think that you are unable to create wealth by solving a problem. And I would argue that the best, biggest, long lasting wealth that's been created by a company has been because it solved a problem. And if you can save people time, and if you can give people peace of mind, then you can make more money than you've ever dreamed of. Point, Melissa, I would not be hopeful for any near term miracles. And the reason why is not just because of mortgages, but who's got money for the down payment? Because again, inflation is a problem, continues to be, and rents are coming down, right? And so, there used to be this old saying, and maybe that's why it's old, is rent is throwing money away, which I don't agree with. I think rent is buying a certain amount of freedom. And so I do not. So if you're watching and you're renting, don't feel bad about it. Just have a plan. Everybody should have a plan, because otherwise, if you don't have a plan, of course we know, then you just have a plan to fail. But commercial
Yeah.
real estate is going to be interesting. Here's why. And there's a lot going on, but because rates came down, it's going to make it easier for, let's call it the best balance sheets. What are the best balance sheets? It's the biggest balance sheets. So what's happening is private equity is sitting on so much money that they're turning into private credit. What that means is they're saying, why would we take the risk, what Wall Street calls equity risk premium, what you and I call stocks going up and down? Why would we take that risk when we can just lend them money and get ahead of these slow banks with tons of investment committees and people? They got to, oh, I got to put this rubber stamp on it, and I got to do this. And so what's happening is private credit is one of the fastest growing aspects of our market. And so even though the Federal Reserve, which is in charge of our money supply, they've put the brakes on, but private credit, they got their foot on the gas, and that does not seem to be slowing down. And now that we had the Fed just cut rates, so here's what I would expect, and what we're betting on: more M&A. There's going to be takeovers. Uh, the the best balance sheets of companies that are growing but small, they're going to get swallowed up by the bigger fish. The bigger fish with good balance sheets will borrow money, buy their own shares back. And that's why you have to own something that's going to appreciate. And that's not a purse, and it's not your car. I'm sorry.
Something tangible, and then that kinda leads us into gold and silver. I mean, that was another thing we talked about. That's been steadily
Yes.
increasing. Silver, yeah, and gold. Is that gonna continue, do you think?
Yes, I think. And that's why I have the props out here for our viewers. No, I don't go around dressing like Mr. V, Mr. T, but this is for a point. So, yeah, I have some jewelry on. Gold, which I've been writing about, talking about with you, and I appreciate you guys letting me discuss this. You know, people think that the value of gold is going up, but it's not. Gold just kind of stays the same. The value of the dollar and other fiat currencies continue to go down. And so you've seen gold approaching what? It's north of $3,600 an ounce. It's record high, up more than 36% for the year. Silver over $40 an ounce, up more than 40% for the year, right? So that trounces any, like the Dow and the S&P, NASDAQ, trounces all that, trounces the XUS World Index because of the technology, because of people like yourself and your team that are able to disseminate to everybody that's watching information that used to be hidden. Everybody is realizing that fiat currency is fake currency. They're starting to realize that things that are hard to recreate, whether it's a block of Bitcoin or whether it's an ounce of gold, those are going to continue to be valuable because demographic situation means that we continue to grow. There's more people. Demand goes up. What about supply? You still got to dig it out of the ground or mine it electronically. And by the way, what's different about Bitcoin than gold is that there's only 21 million Bitcoin ever. Gold is whatever we can find, right? And so, yes, I'm bullish on gold, silver, platinum, palladium. So I'm from an Indian American background. My family um, and so within the Indian American culture, weddings are gigantic, right? It's like a week long circus, yeah. And one of the things that is a let's call it a tradition is the gifting. And just like it is in other cultures, it's in order to give a young couple a means to start some assets, right? So normally, what do? You give them a check or cash, an envelope, right? Maybe some furniture or gift cards. I was the guy that ordered physical precious metal commodities. So I gave my sister, now we're Indian, so she's already got the gold. So I gave her blocks of silver, platinum, and palladium. And I hope that she's still got them. P, if you're watching this, don't spend that. Keep it in the bank.
That was gonna be my second question. So, for those of us that do have, like, some silver, hold on to it then. This is gonna be continue to hold on to it for now.
Yes. And for the foreseeable future, unless you believe the following. If you believe that the Federal Reserve, after more than 100 years, will suddenly figure out how to protect the value of the dollar, don't listen to me. If you believe that inflation will go away, do not listen to me. And if you trust government institutions and the Wall Street advertisements, then don't listen to me.
Yeah, I think we kinda have a good bet on who to listen to. We should be listening to you.
Well,
So
here's what we should listen to. We should listen to history, facts. Um, we should listen to our founding fathers. We should listen to our hearts. We should listen to our minds, but we should not be scared to disagree. And if we're scared to disagree, we shouldn't be violent about disagreeing.
exactly. And now are there any other things that are going on that you think in the financial market that we really should, like, touch upon or that are exciting or alarming, either way?
Yes, so many. Let's see if I can do a quick 3 to 5 bullets.
Okay.
So, A, I think that automation, AI is gonna pull the rug out from underneath people. I think we should talk about Intel and what's happening because it's not a coincidence that the US government took a 10% stake in an old school tech company, and then the new school, NVIDIA, buys another stake, and that stock pop. Full disclosure, we do own all those companies. Uh, the third thing I want to talk about is what's happening with our education system, because here's what I'm worried about. Do you know that student loan debt is the only debt that, even if you file for bankruptcy, you can't erase that away? That's kind of
I know.
criminal. No wonder these young kids are young and dumb and angry because of it, because they feel like they're pigeonholed, locked up, stuck in a corner. And in a certain sense, they are. But the reason why they are not is because we have capitalism. Capitalism is not evil. Okay. Socialism sounds great because you have social studies and social media and whatever. No, no, no. Listen, capitalism, we haven't had it since before World War II. Okay. We've had crony capitalism, which is why you see Mr. Pelosi outperforming the world's smartest hedge funds, and which is why you see no financial literacy and why you come out of college with a PhD in some stupid degree that nobody wants, and you owe $100,000 and you don't even know that you do.
Right. I know. And they can take that. I mean, it's just like the IRS. They can go and get that from your if you get income
They can
tax back
garnish
or
your
any of that.
wages. Yeah, no, you don't wanna mess with them, and but you don't need to. You don't need. So here's one thing, Melissa, please do me one favor. What if I said that if you gave me 20 minutes, I can't solve the problem, but I can give you 3 to 5 bullets on how to help the problem with education, financial, student loan debt, lack of financial literacy, uh, young, angry graduates, people with degrees that nobody wants. If you give me 22 minutes, I can give you at least 3 to 5 helpful solutions.
Just trying to get out of the rat race of the student loans and being able to just get some financial literacy when you're young before you start out making these mistakes.
And why it's not a coincidence that some of the wealthiest people in our world did not graduate from college. It's not as necessary as they make it seem. Oh, I just have to go with the flow. The reason why college is expensive is because government subsidizes it. That's another reason why homes are expensive, because government subsidizes it. When you subsidize, you're not just being a saint, you're creating inflation and you're making it so it's harder for other people that were already prepared. And so there's a reason why the road to hell is paved with good intentions. And that's one of the things that I want to explain with facts and figures next time.
That'd be awesome. I definitely look forward to it. So as always, I always learn a lot and I think you kind of cut past the BS, so to say, and cut straight to the point, which is a good, refreshing thing. And I enjoy you being on the show each time. And thank you so much for joining us again today.
It's always a pleasure. It's an honor, and I have fun every time. Melissa, keep fighting the good fight. And man, I really look forward to next time. Thank you for having me.
Thank you for joining the Business Roundup, where we always try to bring you interviews with some of the leading people in business, whether it be technology, finance, or energy. I hope you tune in. I hope you subscribe and listen, and we'll give you updates for new interviews that are coming up. Until next time, I'm Melissa Bill.